Hi everybody, welcome to another update on Stock Screener. Today we're going to try to give a valuation on royalty companies. I have only done gold mining companies. Now we are going to start looking at a gold royalty company. And how do you value a royalty company? It's actually really easy. You just use the same technique for everything. You can use the NPV flowchart for anything that you want to evaluate, even tech companies, even utilities. You can just pick any company and use an NPV flow chart on that. It's always about cash flow. So Franco Nevada, do you think this is overvalued or undervalued? PE of 31. Well, let's see. I have already done the homework. What's most important for Franco Nevada is this chart. Here you can see that gold production is rising. It's rising each year, and I expect that this will continue to rise for many, many years, like 30 years. Of course, at some point it will stop rising that fast because you can't find those mines anymore, so it will flatten out at some point. But let's say this is linear. Let's say this will continue to grow linearly, and that's what we are going to use as our NPV flowchart base. Okay, that's the first thing, the amount of GEOs, gold equivalent ounces, and it's about 600,000, 600, yeah, thousands. So I increased it by 50,000 each year for 30 years. That a lot of administration here on Excel. So for 30 years, we are going to keep on increasing the production. Gold price, I have just put it at 2,200, assuming that gold will stay at 2,200. Net income, the good thing about this company is they already give me the number. As you can see here, the adjusted net income is about 50% of the revenue, right? So it might actually start to become more percentage of the revenue. So here it was low and then it rises, but let's just use 50% to be conservative. So that's the cost. Cost is revenue divided by 2. Okay, that's the conservative view, that this will be 50% of revenue. And then we have the net income. It's really easy. Net income is just revenue minus costs. We don't need to look at taxes and all of that because they already deducted this and cost of sales and G&A. So now we have the net income flow per year based on the gold price, right? And the costs that are half of the revenue. So enterprise value, actually they have a lot of current assets. 20, what is it? 2.8 billion current assets. That's a lot. And they don't have any liabilities. It's only 200 million liabilities. So this is a very good balance sheet. So that has reduced the market cap to, the market cap was 21 billion, and now the enterprise value is only 18 billion. So enterprise value is lower. But of course, when we look at the chart, the NPV chart, it's overvalued. With a 10% discount rate, The cash flows are coming in, but at a very slow pace. 25 EV to free cash flow. That's going to drop, of course, over the years because the production is going up. But yes, even in 10 years, it's still PE of 15, which is too high for me. So with a 10% discount rate, the cash flows will start to come in too late. So this is how the curve will evolve. And your enterprise value is not going to be reached with this NPV. So I think Franco Nevada is overvalued by 20%. Yes, from 18 billion will drop back to 14 billion or something like that. Using these numbers, of course. If gold goes up, yeah, what's the leverage? I have calculated it. Leverage is 1. If we go from 2000 to 2200 gold, that's plus 10%. The NPV goes up also by 10%. So buying Franco Nevada is exactly the same as buying gold. There's no leverage at all. So why should I buy Franco Nevada? I can just buy gold. There's no use for me. And the dividend is not that high with a P of 25, 22. So it's not like I get a lot of dividends for the price I pay, because I need to pay 20 billion market cap for this company, and it only pays me 1 billion in net income. So yeah, that's the easy way to put a value on Franco Nevada. Basically all gold, silver, that's the same as gold, and oil basically follows gold as well. So yeah, just use the gold price for this one. Yeah. We also know that Franco Nevada owns the Cobre Panama copper mine. So that one is offline. Yeah, Cobre Panama here. 22% is offline. So that's a huge chunk of production. Now, of course, this will probably get back in production in 2025, I think. So it's not like it's a permanent problem for them. But if this one is to be shut down forever, yeah, that's quite a bit of production that's gone. About 120,000. Yeah, 120, 130,000 production that's gone. Yeah, that will be a hit. So the whole chart will be much lower. But I don't expect that Cobre Panama will stay offline. Okay. Having said that, Franco Nevada to me is overvalued, has no leverage. I will never buy this company. And it's also down a bit, so it's not going to do anything, just going to follow the gold price. So that's how you evaluate gold royalty companies. And I'll see you in the next video. Bye.